Homeowner.com, and you're going to tell me more about a reverse mortgage.
Yeah, reverse mortgage, also known as a home equity conversion mortgage. And then there's also a product called a HomeSafe Second that's available in Washington State. You got to be 62 years or older in order to qualify for a reverse mortgage. Both homeowners, you know, if there's two people together in the same home, both got to be 62. Same thing with a HomeSafe Second. HomeSafe Second is basically just like a HELOC or a second mortgage, but there's no payment required. So,
okay,
yeah, it's a beautiful thing. I just finished that. We just sat down and signed closing papers on Friday with a couple that took out a reverse mortgage on their home. They're super happy, super excited. They've got a line of credit that they'll be able to tap into. They'll be able to just blow up their savings now because they don't have a mortgage payment that's going out every month.
Doesn't the bank take their house if something goes wrong? Isn't that how that works?
Yeah, I actually talked to a real estate agent, oh gosh, it's been a couple of months ago, and he got mad at me.
He got mad at you?
Well, yeah, he was just a little bit angry. Yeah, well, you know, I better not find out that you're ever talking to my parents about a reverse mortgage, or I'll hunt you down. And, you know, because I don't want the bank taking my parents' house. And of course, I just kind of chuckled at him and said, wow, you know, talk about operating on 20-year-old information.
Right.
that has been changed. There are consumer protections that have been put in place by Congress a number of years ago. 2014 was kind of when they really stamped it and said, you know, you try to take advantage of this segment of the population, you're going to prison.
Okay.
And so there are just consumer protections up and down the reverse mortgage industry.
Because there was an issue in the past?
Yeah, there were just, you know, they were allowed to, reverse mortgage companies were allowed to go to 95% loan to value. I mean, they were just flipping people upside down in their houses, putting themselves on the title with the homeowner.
Right.
There were banks that were actually saying, you know, to protect our interest, we want to be on title. And then, of course, when the balance of the mortgage got to be higher than the value of the house, the bank would kick them out. And there's people that went to prison.
Okay, but that's not happening anymore.
Well, I mean, again, it's just illegal.
Got another phone call. It's Local Matters. You're on the air.
Hello?
All right.
Must have answered their question.
Right, totally.
Yeah, so, you know, I mean, the beauty of it is, you know, in this reverse mortgage scenario, in the home equity conversion mortgage, and that's what it is, right? I mean, it's a home equity. You're converting your home equity into
the money that you've already paid into your house.
Right. You got to have equity. I mean, if your house is worth, you know, let's just say $400,000, and you still owe $200,000, there's a pretty good chance you're not going to qualify for a reverse mortgage without bringing $75,000 to the closing table. But how many people are going to do that? So, I mean, at the end of the day, what we have to do is take a look at. You really have to be equity rich in that situation if you want to, you know, have a line of credit and, you know, really have it. And again, I'm not the guy that's going to come in and try to force a square peg into a round hole. It's not right for everybody. Not everybody's in a position to be able to make it.
If it's not right for me, you're going to tell me, hey, this might not be the right thing for you.
Yeah, exactly. I've had a number of inquiries in the last, 6 months since we've really started talking about it. A lot of inquiries, and really only about 20% of the people that I talk to actually qualify to where it makes sense.
Mm-hmm. Okay.
It's just got to be something, and I told this last guy that we signed with, this couple, I said, look, I'm not a salesman. I'm not here to sell you anything. If what I'm presenting to you isn't going to help you, if it doesn't excite you, then just tell me to pack up my laptop and get the heck out, and I'll leave.
That'd be a nicer way to say that.
Well, yeah, they could say, you know what, thanks, but no thanks, and that's fine. I appreciate that. But like I said, sometimes when you talk to people who are operating on old reverse mortgage information, they just, they put up the silver cross. They look at you like you're a vampire, and like you're trying to take something from them. And at the end of the day, more and more financial planners that I've been meeting with and showing them how it works, their eyes are open. I mean, they sit there and look at me like, I had no idea. I had no idea that this was so beneficial. In fact, I'm getting ready to put on some webinars, free webinars, so watch for that to come out on my website and on my social media. We're going to set up a webinar where you can come in and you can basically learn all about how they work.
Are there other myths about reverse mortgages that you can clear up?
Well, you know, the first one that we covered, right, that the bank's going to own your house, bank's going to take your house. Well, nothing could be further from the truth. The only people that stay on title for your home are you and a co-borrower if there are two people living in the home. Other myths, oh gosh. Well, people say they're expensive. There's no doubt. It's not a short-term solution. The closing costs on reverse mortgages is fairly high. Mainly because the bank, the lender, has to basically defer compensation. They're not going to get compensated until you graduate, if you know what I mean.
Right.
Okay, so the bank has to wait 20, 25 years to get paid on anything. I mean, they're not getting anything other than, you know, a piece of the equity in your home.
All right. Hey, we got a phone call. It's Local Matters. You're on the air. You're cutting out like a lot. Can you get a little better signal there?
Well, he was just saying that he was under the assumption that the bank takes your house, and and again, that it used to be that way. They did. I mean, I talked to a guy, a friend of mine, whose grandmother lost her house because the bank. Well, and I mean, one of the things that happened, and it's now been made illegal, is reverse mortgage companies. Some of the smaller reverse mortgage companies, and I deal with Finance of America Reverse. They're the largest reverse mortgage company in the country. Tom Selleck is our spokesman. You know, we call him the mustache, and so there's really very little danger. But there were some smaller, and I'll call them fly-by-night reverse mortgage companies that were doing reverse mortgages, and then all of a sudden, when they did, you know, 10, 20, 50, 100 mortgages, and there's no money coming in because nobody makes payments on reverse mortgages if they don't have to, and all of a sudden they go under, they sold their notes to a bank that's a forward mortgage bank. And the bank would send notices to the people that says, your first payment is $1,600, it's due on August 1st. And these people who hadn't had to make a payment on their mortgage for 10, 12 years, all of a sudden are being expected to come up with $1,600 a month, which is more than they make on Social Security sometimes.
Right.
And so that got kiboshed. So when a reverse mortgage company goes under now, if a lender goes under, they cannot sell to a bank or an entity that's going to turn them into forward mortgages and expect people to make payments.
Yeah, better now.
A lot better. Yep. Mm-hmm. Well, there's going to be an amount due when you graduate, right? We all know
when
what
you
I'm
pass
talking
away.
about. Yeah,
I'll
when you
say
pass
it.
away. Okay.
Yeah.
So there's going to be equity in the home. That's one of the reasons why so many people are misinformed about reverse mortgages, because you're not going to be able to come in and get 90%. If your house is worth, you know, $500,000, you can't walk in and say, well, I want a $400,000 line of credit against my house. That's not going to happen. I mean, if you're 75 years old, we're going to take away what you still owe on your house, and then we're going to take about 45% of that, and that's going to be what's called your equity available. And so what we do in the reverse mortgage lending world is we don't allow you to tap into so much of your equity that by the time 20 years goes by, you're upside down. And even if you are, you're paying mortgage insurance every month on that home, so that if, right, and it's very rare, if the value of the house is lower than the amount of the mortgage, that FHA mortgage insurance pays the difference. Kind of like when you buy a car and you take out what's called gap insurance. Same exact thing. FHA is going to pay the difference. Your kids, your heirs won't get any equity because there won't be any left. But in this case, this one that we just signed on Friday, I mean, the value of the house is just a little over $200,000. And at year 20, I think the equity in the house is going to be 250 still, based on a growth factor of 4% in the home value. So it's not. Well, again, there's going to be equity available for your kids. You have up to 1 year after you pass away. Your kids have up to 1 year to essentially reconcile with the lender. And in this case, let's just say the balance on your reverse mortgage is 250 grand and your house is worth 500 20 years from now. There's 250,000 equity for your kids. No, not a dime. No, they're gonna get a check at the escrow company when it's all said and done. Yes, thank you.
Let's see, I got a text message that I will relay to you after this break. We're with Larry the lender on Local Matters.